Hello, friend. Welcome to Vision Achieved, my daily advice about one company stock and how to develop habit of investing in share by purchasing at least minimum one share per day. So this video is part of my daily habit. Every day I study one company and then make an investment. I buy at least one share per day. Why I do it? Instead of spending money on some unwanted, not so important expense, I like to spend money I like to invest money in share market. And the company I have selected today is called HG Infra Engineering Limited. And why are we investing in this company? Because of two reasons. Fundamentals are good and the company has given right signal on stock market. Also, some of the leading advisors are giving some right forecast. So currently the stock is at 860 rupees. It is likely to grow to 1260 rupees in coming few months. So let's go to the fundamental analysis. This is HG Infra Engineering company. What is this company? This is all about constructing roads in India. And they are constructing roads all over India by winning some major tenders, and they have orders worth 7,900 crore. They are constructing roads in two schemes. One is called Engineering, Procurement and Construction Service and Maintenance, where they win a tender and win a contract. And second is also known as hybrid annuity model, where they would do probably a revenue share. So as the highways are ready and they start collecting road toll, this company will start seeing revenue flowing in. So let us see how are they doing. The share price today was 847 and the market capital of this company is 847 multiplied by number of shares, which is 6 crore 52 lakh, comes to around 5,520 crore. How is the management of this company? The management is pretty good because of these three ratios. The ROCE is 25.4, ROE is 29, and ROA is 12. And in my training, I explained why these three ratios are very important, and they let us know the health of the management, the philosophy, and how this company is run. Anything about 10% is good. Earning per share is 75 rupees for last year, which ended on 31st March, which is very good. Company has some loan debt. The debt on company is 1900 crore and their total reserve plus equity is also close to that. So debt to equity ratio is just 1. For an infrastructure company which has a huge cash flow challenges, this is okay. The way to read it is company generated a sale of 4,600 crore last year. So to generate sale of 4,600 crore, this company needed a debt of 1,900 crore. Or in other words, to generate a net profit of 493 crore, almost 500 crore, they needed a loan of 1,910 crore, which is 3.87 as the ratio. Company has not pledged its share, means the owners own the share with them, and this loan has been arranged through some other financing mechanism. Their earning before interest and tax is 818 crore, which is very good. And the interest they have paid is 150 crore. So interest coverage ratio is this divided by this is 5.32. To pay 1 rupee interest, they had 5 rupees with them at any given time, which is pretty good. Remember, the company had the option to use this 818 crore and clear this debt. But instead, they paid some tax and they generated net profit for themselves and for the investors, right? Which is a good strategy. And even the lenders are happy. They got their capital principal amount as well as the interest because they make money through interest. So this is the way economy runs. The holding patterns, the owners are holding 74%, and FIs have 1.3 and DIs have 14. So 15% is here, 74 is here. So general public has about 10%. I like the companies where the general public holding is less than 10% and FI DIs are more than 15%, which is what the case here is. So now why this company is suddenly becoming so interesting? It is interesting because of the following reason. Quarter after quarter, as I said that as the Modi government completes its 10 years next year and majority of the highways are ready, the revenue from toll tax will start flowing in, and this company will suddenly start showing big revenue. For the next quarter, the performance appears to be flat. The January, February, March sales was 1,500 crore, which in April, May, June will become 1,300 crore, which is a negative growth of almost 10%. Their operating profit, 297 crore for January, February, March, is reducing by a few crore to 262 crore, minus 11% growth. And net profit, however, is growing slightly by 8%, which for January, February, March quarter was 171 crore, which is increasing to 185 crore. And therefore, the earning per share is expected to grow by 28.3, which is a positive news. In this company pay little dividend, out of the 493 crore, they paid only 8 crore as a dividend last year, which is just 1%. So what does it mean? The remaining amount goes back into the company to increase the health of the company. And therefore, their SSGR, self-sustainable growth rate, is not very high. It should be about 10, 12, but it is 8%, which is pretty good. And the sale of this company has been increasing. Past 3 years, 27 compounded sale has been 27%, 5 years, 21%, and 7 years is 29%. And on stock market, this stock is generating a medium size volume of roughly about 1,45,000 shares are traded on average of 1 month daily basis. Okay, so that means the company is pretty good. Coming to the technical side, the stock has been continuously growing. If you see this yellow line, which is a 200-day moving average, is going up. Light green line, can you see this one? It is growing up, 50-day moving average, and actually the candles are also going. So that means the stock was growing day by day. However, these days, the stock has given a very nice signal by moving below Bollinger Band. That means somebody is booking profit, and therefore the stock has come a little down, which is a window of opportunity to enter this stock, because eventually this stock will grow about 1,200 in coming few months. And that's the reason we are buying this stock. Okay. So I made a sale on my ICICI Direct account and purchased one share. And now let's move on to the exit strategy. So friend, yesterday we invested in DMart share, right? And I'd also talked about this share. Today, we are investing in HG Infrastructure. 847 is the price. Exit price, right price will be 1,060 to 1,260. And it all depends when it happens. My anticipation is by mid-August, it should cross 1,060 and then it should grow towards 1,260. My name is Pramod Deshmukh and I run Vision Achieved. And here we study more than 1,000 share company performance and their share movement over a period of 1 year. And if you want to become rich, just keep watching my video and go as per my advice. You will make decent money. And if you want to learn how to select, pick and choose this stock, join my course, Vision Achieved. My contact details are in the WhatsApp group. So tomorrow I'll come with a new company share and we'll make a fresh investment. Thank you very much.